I'm Barbara Bass.
With C. Bass Properties and Investments, and I'm here with Alexandria, owner of Calvic Insurance, and she's going to talk about what kind of home insurance we need for that beach house in North Carolina.
Yeah.
Alexandria!
Thank you for having me today. I'm super excited you invited me here. So like she said, we're going to talk a little bit about homeowners and flood and wind and hail and those terms that you hear when you're moving from out of the area onto the coast. We obviously have to, there's a lot of terms that people hear that they're not familiar with. So
Yeah.
the biggest thing we want to talk about is insuring that home. So the actual structure itself. You're going to have to get homeowners and wind and hail. Wind and hail can sometimes be also labeled as named storm, but they're the same type of coverage actually. It just depends on your deductible. So if you have a homeowner's policy that's covering wind and hail is hurricane damage. So everyone's heard of those hurricanes that we got hit with the last few years, and that we're wanting to make sure that we're addressing those coverages. So wind and hail is when the wind and hail is coming down from the sky and it's damaging your home, typically with some wind-driven rain or water damage through the roof and windows and things like that. Now, if you have a wind and hail deductible, that means that deductible, so what you pay before the carrier covers you through the claim, that's going to be for any kind of wind and hail damage that you have. It doesn't have to necessarily be a named storm like you would with Hurricane Florence, Hurricane Matthew, with Hurricane Dorian. Those are named storms. So if you have a named storm deductible, your wind deductible only applies if the damage comes from a named storm. Does that make sense?
Is that deductible sometimes higher or lower?
It's
or...
typically a percentage of the dwelling coverage. So let's say, for example, we insure your home for $300,000 in dwelling coverage, and you have a 1% wind deductible. That means your deductible is $3,000.
Okay.
So it's typically pretty upfront. It's on your deck page. Some carriers are going to split that coverage off and write it with another carrier, but I'm an independent agent, so the difference is that my carriers are going to include that wind and hail in your homeowner's policy.
Oh, wonderful.
Yeah, it's sometimes cheaper too,
Oh.
usually.
That's
It's always a bonus.
right. Then what about flood insurance? When do we need to get flood insurance?
So we always, as insurance agents, we're overly cautious. So we're going to always recommend that you have flood insurance, because there's a lot of areas where you wouldn't have a hurricane claim, but you get flooding. So flooding is when the water is rising up from the ground into your home, but it can also be rain that's coming into the home, but it looks like a flooding claim. So if you have flood insurance and homeowners and wind, that's a pretty thorough policy, and we always recommend it. Now, flood insurance rates are variable. If you are not in a flood zone, what we call X, then you're not going to be required by anyone to carry it, but it's also the most reasonable premium that you can get, and it's always going to protect you in case you have a flood claim. But a lot of areas on the beach are going to be in a flood zone, and those flood zones can be AE, VE, or even sometimes, depending on where you are, a COBRA flood zone. So AE and V are more popular on the what we call Carolina and Cary Beach, and those are going to be based on how your home is built and if you have the proper venting for flooding. If you are purchasing a home that already has a flood policy, though, a lot of times we can call what's called grandfathering it, so we can assume the policy that the seller has for the buyer. Does that make sense?
It does make sense.
Yeah.
When you're doing the flooding, is it just the ground floor square footage, or is it just heated square footage, or how does that calculated, that flood policy?
So if you're not in, so the FEMA policy is a federally mandated program. So the maximum dwelling coverage you're going to get is $250,000 in dwelling and $100,000 in contents. And depending on the flood zone is where those kind of factors come in. So for example, if you're in an AE flood zone and you have, you know, those enclosures that you have on the bottom, you have the pilings, and then there's like one little enclosure. It's a stairwell or a storage or something like that. If that enclosure is properly vented for flood insurance, that would be the wording that we would use, then we can actually exclude that enclosure and rate from the highest floor up. But for a VE zone, which is going to be typically a worse rating and more applicable for flooding, we're going to have to include that enclosure. So it just depends on the structure itself and the flood zone that we're looking at. But the elevation certificate, that's the document that we'll ask for, that will tell us a lot of that information.
Okay, wonderful. Is there a difference, like with the home was built when it was not in a floodplain and then it got redesignated into flood? Is that a different kind of flood insurance that you get?
So that's going to be a lot of that is what we call newly mapped zones, because the flood zones in New Hanover County have changed twice in the last 2 years. They changed August 28th, 2018, and they also changed in July of 2019. So let's say your home wasn't in a flood zone and now they're designating it that it is. Well, there's a policy, it's called a newly mapped rate. So we still give you the rate that you had under the X zone for the first year. After the first year, that rate will continually increase until you hit the full flood zone. But for another example that you gave me in that conversation was grandfathering rates. So if you have a home built in 1958, for example, if there's a certain rating that we have for those kind of homes because they're built before compliance, but if the flood policy is continually in place on that property,
Right.
we can go back to what we remember when we talked about assuming the policy.
Right.
We can always move forward with assuming that policy for those grandfathered rates.
Oh, wow. Wonderful. Is there, what about if you buy a condo or a townhouse? What kind of insurance is the bank looking for, and what do we need to protect ourselves?
Sure, absolutely. So a home policy, what we're talking about, the dwelling structure, that's going to be for your single family residences typically. But on the beach, sometimes we have condos and we also have townhomes, and we have the lovely thing called duplexes in the Cape Fear area. So single family is going to insure the entire dwelling structure. A condo typically is going to have, you're going to pay another person, it's called a master policy, for the exterior insurance. So you're going to pay that through your HOA fees. And then we would insure the gap between what your master policy covers and what you're responsible for. Typically, it's going to be minimal dwelling, so just for betterments and improvements. That's your upgrades that have been made to that condo, as well as your contents as well. And then for townhomes, we're going to want to research if there's master insurance or not, because then they could either be a condo policy or a single family dwelling. It just depends on what the exterior is covered through.
So then the inside part that the homeowner would be responsible for, is that the HO6 that
Yes.
they're looking for? Okay, because a lot of times the lender will say, I need an HO6 policy,
Yeah.
and then we're not really sure what we're asking for.
But the biggest thing, going back to those duplexes on Carolina and Curie Beach,
Yeah.
where you see it's a duplex, so sometimes they have master insurance on the 2 units, but sometimes they don't, and you have to insure them like a single family dwelling. So that's why you want to have an insurance agent who knows how to research that information, figure out what the differences are, and give you the right policy, because you don't want to have a claim issue.
Okay, because I know a lot of times it's like sheetrock in or sheetrock out. And,
Yeah, drywall in is one of the things that condos cover. It can also cover drywall in, but exclude your fixtures, your lighting, your flooring, but it could also be as further as it covers everything. So you only need to insure the upgrades made to that condo. So there's varying levels of coverage that we can see, and that's why it's so important to do that research.
Okay, and then my last question would be, a lot of people do vacation rentals or they own investment properties. What kind of insurance do they need to get as a homeowner for those rental guests to make sure that they're protected, especially the ones that are self-managing with the VRBO and the Airbnb?
Absolutely, yeah. So with rental properties, there's a few different options that we have as far as when we consider rentals. So you have your annual rentals, but you also have your short-term rentals, like Barbara mentioned, your Airbnbs, your VRBOs. And Airbnb and VRBO do offer coverage. I've read the policies because I'm a nerd. But it's not the same coverage as you want to protect yourself as a landlord. So you're still going to insure that home the same way as you would through the dwelling. So the dwelling coverage is not going to change. But the contents may. If it's a furnished rental, you want to insure that under your rental policy. If it's not a furnished rental, but you own the appliances in that rental, you want to insure that under contents. But the biggest one I see is the loss of rental income. A lot of people purchase investment properties as investment. They want the money every month. So what are you charging per month? And then how can we equal that if that home was uninhabitable for 12 months because of damage? It's called loss of rental income. And then we want to have the liability as well. Okay. So it's very similar, but the terminology is a little bit different on the rental properties. But it's the same coverage as you would as a primary or a secondary residence.
Okay, so you would just recommend really getting somebody, a professional like yourself, to read through the policies that are already in place and see what we need to do to fill the gap, and then what are those uses for the property going to be, so that we're adequately covered. Yeah, because there are certain consequences if it's not written properly when it comes to a claim, and that's why it's so important. I have a lot of clients who they put their house on the market and it's vacant for 6 months, but they still have it written as a primary residence. That's going to cause an issue if there's a claim. So having an agent that you can reach out to, let you know what's going on in your life. That way we can make sure that if something worst case scenario does happen, that we're protecting you. Absolutely. Great, thank you.
Yeah.
reach out to Alexandria here. Thank you.